In this video, we're going to continue with part 2 of common tax questions for owner-operators. We're going to talk about per diem, we're going to talk about miscellaneous items, and we're going to talk about family deductions. Let's go. Yeah, fresh, I know, right? Welcome back to another edition of Trucking with Loshawnparks, where you could have been anywhere else in the world, but you are here with me, and I truly do appreciate that. So in this video, once again, this is part 2 to common tax questions for owner-operators. Now, this is not common tax questions for company drivers or W-2 workers. We're talking about owner-operators who are on 1099, independent contractors, business owners, things of that nature. All right. So without further ado, let's go ahead and continue this. So in part 1, we talked about a couple of things as far as putting taxes, how much to put aside for taxes. Also, when you should file your taxes, receiving tax refunds, also a little bit about the 1099. So now we're going to talk about per diem questions to open this up. And the first question that comes from ATBS. Once again, this question and answer portion is coming from ATBS, and you can go to ATBS and use them if you're looking for a CPA or a tax person that knows about trucking. That would be TBScom. Go in there, take a look. I don't have a promotional code for you because I'm not sponsored by them, so can't get you no discount. But I do like this write-up that they put out, so I decided to bring it to you guys and my subscribers on my channel to keep you guys knowledgeable and aware of some tax questions. So let's continue on. First one is per diem questions. That's the section that we're on. The first question is, how does the per diem tax deduction work? Okay. And it says, A, per diem is a tax deduction for meals and incidental expenses on the days you are working away from home. The current rate is 80% of $66 per full day and 3/4 of this amount for partial days. Partial days are the day you leave home and the day you return. All right. Full days are any day you need to stop driving due to the hours of service rules or unable to drive due to on-the-road repairs. Visiting family and friends for a few days do not count as per diem days. If you are using a motel/hotel while on the road, per diem is still deductible, but not during home time. So it's really important that you guys do understand about what you guys can write off as far as per diem goes. Once again, Trump did pass the law back in, I think, 2018 or 2019, I believe, where company drivers cannot claim per diem. Okay. It would have to be something that your company or your carrier provides to you in a reimbursement. Okay. So if you're a company driver, W-2 worker, you cannot claim per diem at all. Okay. Just to put that out there. But once again, this is not for W-2 employees. This is for 1099 contractors or owner operators. All right. So just wanted to make sure that you guys do know that about the 80% of 66 per full day and 3/4 of this amount for partial days. Okay. Make sure that you do understand that and know that when you're visiting family, it doesn't count as per diem. Okay. It does not count as per diem. Next question. Can I use my elog records to count the days for per diem? And the answer is you can if you have the full year of elog records. Contact your carrier every 3 to 4 months and ask for a copy of your elogs. Many carriers delete elogs every 6 months. So do not wait until the end of the year to ask for a copy. All right. So if your carrier provides you guys with elogs to show how many days you've been out, then that's another source that you can use to keep up with how many days you're out. Or if not, you can just simple bookkeeping, write down how many the days that you're out on the road, and you keep up with it yourself. That's another way to do it. All right, and that's going to pretty much wrap it up as far as the per diem questions go. We're going to move on to the next section. It's called family-related questions. All right, let's get into it. The first question is, should I file my tax return separately from my spouse? All right, and the answer is, as a married taxpayer, you have two choices: married filing jointly and married filing separately. Excuse me, had a little freeze there. And married filing separately. Generally, married filing jointly will work out better for a taxpayer, but not always. ATBS can prepare the return both ways and then provide you with them both to indicate the best tax outcome for you. I've done this where I've done both ways, married filing jointly and married filing separately. And that would just all depend on how much income both of you guys had. You know, if you guys both had some good income, or if one had less income than the other, then you probably would want to file jointly to come up with a good number. If you guys both made really, really good money and you guys want to file separately, then that probably would work out best for you guys to bring you into a different tax burden or tax bracket, if you will. So your CPA can run it both ways and find out the best way that would save you as far as on taxes. So there you have it. The next question is, can I claim a parent as a dependent on my taxes? And the answer to that is, to meet the support requirements necessary to claim your parents as a dependent on your tax return, you must cover more than half of your parents' support costs, meaning 51% or more of their support costs must be covered by you. These costs include food, housing, or lodging expenses, clothing and medical services, and or equipment costs. To be a qualifying relative, the person you're caring for can be your parent, in-law, or grandparents, okay? So don't be trying to claim your auntie, your niece, your nephews, your uncle, your cousin Jojo from the block. That ain't gonna work, okay? That is not a qualifying relative. Once again, a qualifying relative is a parent, an in-law, or a grandparent, and you must be providing more than 51% for them, okay, in order to claim them on your taxes as a dependent. If it's anything less than that, you cannot claim them as a dependent on your taxes, okay? On to the next question. How much of my or my spouse's Social Security income is taxable? And the answer is, how much Social Security income is taxable depends on your total income and marital status, okay? So very important to know that. If you file a federal tax return as an individual and your income is between $25,000 and $34,000, you may have to pay income tax on up to 50% of your benefits. Very key. Make sure you paid attention to that, okay? If your income is more than $34,000, then up to 85% of your benefits may be taxable. If you are married and you file a joint return and you and your spouse have combined income that is between $32,000 and $44,000, you may have to pay income tax on up to 50% of your benefits. So once again, what I had just indicated is really, as far as filing separate or filing joint, is really going to depend on how much both of y'all have made to determine the tax brackets and stuff like that. But once again, the answer to this was the question, how much of my or my spouse's Social Security income is taxable? So they're talking about Social Security in this portion, but I just read off the numbers to let you know how much of it is income taxable, okay? Next question is, should I claim a dependent on my quarterly estimated taxes? And the answer to that is no. You should claim dependents only on your year-end tax return, All right, let's get into the last section. You're ready to complete this video out, and that is deduction questions. So like some other questions that you can ask. I think actually I have another portion where we have miscellaneous deductions, but let's get into deduction questions. First question is fuel tax deductible for truck drivers? And the answer is yes. Fuel tax is part of the cost of fuel, so it is deductible as an outgoing owner-operator fuel expense, okay? So you guys been asking, can you write off fuel tax is it fuel tax deductible? It is, all right? Now here's another question that's really important because a lot of people ask this, and it is, can I claim the home office deduction? All right, let's talk about this. Let's give an answer to it. The answer is, it is possible for an owner-operator to qualify for a home office deduction. However, you need to meet 2 tests. Let's find out the answer to those 2 tests are. The home office must be used regularly and must be used exclusively for the business, and the home office must be your principal place of business, okay? So you must use this office regularly, and it also has to be the address that is on your business, right? Which a lot of people are their own registered agents, right? So when you're your own registered agent and you use your home address, then you can write that off. But when you do it that way, it just depends on what you're trying to do. If you're trying to build business credit, it's not advised that you use your home address, right? It would be advised that you use a virtual office, get a website, get a 1-800 number to make your business look legit. Because if you're trying to build business credit, then if you use your home address, they're not going to take you serious, okay? When they Google you, they're going to Google it and see a house. They're not going to give you no credit. You walk into a bank trying to get a business loan, they're going to laugh you out the bank because you don't look like a legitimate business. So this is kind of like the devil in the details, right? So if ain't nobody ever told you guys, when you guys are using a registered agent, I would probably get a registered agent. You know what I mean? Go on the internet, go to Google and look up registered agents for your area. Get a registered agent and put your business in a virtual office address and get a real 1-800 number and get a real domain name and a website and things of that nature, such as like email addresses. Like if you're trying to go and get business credit, they don't want to see joeblow@gmail.com. You know what I'm saying? They want to see info@joeblow.com. Okay, so really important information on that. Let's continue on with that. It continues on to say, if you conduct business outside of your home, such as being an over-the-road trucker, but use an office space when you're home to conduct business calls, organize receipts, and overall business functions, then it's possible to qualify for a home office deduction. There has been conflicting information about what qualifies for a home office deduction, but if you can provide the office, if you can prove the office is used exclusively for business, then you should be entitled to the deduction. The IRS may challenge the validity of the deduction for a trucker since your truck is considered your primary place of business. All right. So once again, make sure that if you're trying to write off your office space at your house, that you are following these rules, because you don't want to throw a red flag and they challenge you and then they can come through for an audit. You know, audit from IRS is not fun. Let me tell you that right now. It's not fun. Next question. Is clothing tax deductible? And the answer is generally gloves, steel-toed boots, etc. that are required as part of the job are deductible, but not general everyday clothing that everyone needs to buy. So your Jordans don't qualify. Your True Religions don't qualify. Okay, we're talking about it has to be work-related clothing item. Gloves, steel-toe boots, some overalls, some plaid shirts, whatever you're using, okay? But it can't be something that you wear out to the club or out to a nice formal place and you're trying to write that off every time you go into Walmart or wherever you buy it from the mall and think that just because you get a nice shirt from wherever that you're going to be able to write it off. Wrong. Okay, certain things qualify as work-related clothing. All right, next question is a gym membership tax deductible? For all of my drivers out there getting fit, let's get the answer to this. And the answer is yes, but only if the membership is prescribed by a doctor to treat a specific medical condition. Yikes. You must also join the gym after the diagnosis. All right, so basically you have to have a prescription, a doctor written note saying that you do need to attend the gym in order for it to be tax deductible. So your gym membership is not tax deductible if you're just going in there to get your body right for the summer for the beach, okay? It's not gonna work, okay? Not gonna be able to write that off. The next question is, are medical expenses deductible? The The answer is, if medical expenses exceed 7.5% of your adjusted gross income, you can deduct the amount over 7.5%. All right. So your medical expenses have to exceed 7.5%. Okay. If they're 7.4%, you can't write it off. All right. 7.6%, then you can write off 0.1%. Okay. So it has to exceed 7.5%. Anything that's past 7.5% additional, you can write off. All right. And they give an example here. They say, for example, if you have an adjusted gross income of $50,000 and $6,000 of medical expenses, you would multiply 50,000 by 0.075, which is 7.5%, to find that only expenses exceeding $3,750 can be deducted. This leaves you with the medical expense deduction of $2,250. So $6,000. So the basic example of it was $6,000 subtract $3,750 is after, which will equal $2,250, or $2,250. Excuse me. I think $250, but $2,250 is the only thing that you can write off. Okay, as far as a medical expense deduction. Next question. I purchased an auxiliary power unit this year. Can I receive a tax credit for this purchase? And your answer is yes. Send your tax preparer the receipt or the bill of sale for the APU. Also write down the hours it was used or gallons of fuel used so you can provide the tax credit. All right, so all y'all that got APUs, there you go. Write it off. But you have to have the receipt for it. You know what I mean? Keep record of it. Next question is, are truck dog expenses deductible? And the answer is yes. Truck dog expenses are deductibles, if a dog is acting as a security for the truck, it is considered a guard dog, and its expenses, food, veterinary bills, can be deducted from your taxes. So a lot of drivers out here have dogs. So put your dog down as a security dog, you get to write off all his dog food and his veterinarian bill. All right, and let's get ready to wrap this up with other miscellaneous questions. I think we have 1, 2, 3 questions here. So let's go ahead and finish this out and wrap this video up. The question is, if I sold a home this year, is the profit taxed? Some of y'all out there are homeowners. Some of y'all out there are entrepreneurs like myself who are looking at other ways of making income, streams of income outside of trucking. So let's get the answer to it. The answer is, it depends on how long you owned and lived in the home before the sale and how much profit you made. If you owned and lived in the place for 2 of the 5 years before the sale, then up to $250,000 of profit is tax-free. If you are married and filed a joint return, the tax-free amount doubles to $500,000. The law lets you exclude any amount from your taxable income if you sold for a loss if you sold for a loss, though you cannot take a deduction for that loss. All right, so I hope y'all understood all that right there. Basically, if you lived in it for 2 of the 5 years before selling it, then up to $250,000 of profit is tax-free. If you're married and you file joint, then it doubles $500,000. And once again, the law lets you exclude any amount from your taxable income. All right. If you sold for a loss, though you cannot take a deduction for that loss. All right. Next question is, if I rented out a home this year, do I have to claim it on my taxes? And the answer is yes. You will need to fill out a Scheduled E form, okay? So if you rented out your home this year, you will have to claim this on your taxes, and you will need to fill out a Schedule E form in order to do so. Last question, we're gonna wrap this up. What is the penalty for not having health insurance? All right. And the answer is, the insurance mandate has been removed. As of 2019, there is no longer a penalty for not having health insurance. So this went on to say, basically, if you have any more questions you may feel free to call ATBS at 866-920-2827, or you can visit their website, www.atbs.com. Tell them LoShawn sent you. They're going to look at you like, who? We don't know them. Yeah, they don't know me. Hey, say, hey, I heard this information on YouTube and just want to get some more information for maybe some personal questions that you have. And hey, maybe you can refer them to this video and they can come and check out my channel and like, share, and subscribe, which some of you guys should be doing. If you found this content informational and you liked it, please do like, share, and subscribe. Make sure that you hit the bell in the right-hand corner so that you get notification of more videos that I will be dropping in 2020. It's just going to be a wealth of educational videos from me in 2020. So I hope that you guys enjoyed that. This will conclude the tax questions that most owner operators have. And I hope that it helped out somebody in some way, some form, some fashion. All right. With that being said, y'all be safe. Don't do nothing I wouldn't do, like be unsafe. And as always, winners focus on winning and losers focus on winners. And we win it all day right here. Truck with Loshawnparks. Make sure that you follow me on Instagram, Loshawnparks. Make sure you also follow me on Facebook, Loshawnparks. Yeah, I think that's all I got for y'all. Y'all be safe. Salute.